Hello YouTube, Herman Williams with ATM Financial Services. What is the difference between personal credit and business credit? Does your personal credit history and credit score transfer to your business when you become an entrepreneur? How do you build business credit and why do you need it? Well, I hope to answer all of those questions and more with this video, so stick around. Your personal credit history and credit score can either give you access to capital in the form of credit cards, car loans, home mortgages, personal loans, and even insurance. Or it can prevent you from accessing some of those things or cost you more to do so. Similarly, your business credit history and score can also determine whether or not you have access to capital that you may need to run or expand your business. In my last video, I talked about why you should become an entrepreneur and the many tax advantages that come along with that. I also talked about some of the things that many small business owners fail to do in order to take advantage of those tax breaks. Well, not establishing and maintaining a good credit history for your business can have similar consequences. It can prevent you from accessing capital when you need it the most. If you're a small business owner or thinking of becoming an entrepreneur, be sure to watch that video as well as this one to make sure you're well informed about the things you need to do to live a business life. Unfortunately, many small businesses have had trouble taking advantage of some of the stimulus programs that were supposed to help them. Unfortunately, a lot of them were denied or at a minimum delayed access to funds because their business did not have an established credit history and business banking relationship. Being a small business owner is hard work and it takes a lot of your time. Trust me, I know. Once you start your business, your focus is usually on running the business and turning a profit. We sometimes forget that there are other things that need our attention as well. One of the biggest differences, in my opinion, between personal credit and business credit is that building business credit requires a more deliberate effort on your part. Now let me explain what I mean. You can establish a personal credit score and credit history simply by living life. You may not have a good or great score, but you can have some score without much effort on your part. At some point in your life, you'll buy a car, even if you have to have a cosigner. You'll be in some department store or jewelry store, and some salesperson will say, "You can save 15% on your purchase today if you get a credit card with us. Would you like to apply?" You say yes and answer a few questions, and you walk out the door smiling with your 15% discount, and a few days later a credit card shows up in the mail. Well, it's not quite that simple with business credit. If you needed a loan to help you start your business, whether or not you were approved for that loan was based on your personal credit history. If you were fortunate enough to be approved for that loan, don't think that it starts building credit for your business. The loan is in your name and its history is reported on your credit report. Once your business is up and running, you likely didn't take any other steps to establish business credit other than perhaps starting a separate business bank account. But don't feel bad if that's all you've done. It's actually a pretty common reaction to starting your business. After all, your primary goal at that point was to get your business started. Now that you've done that, your priorities likely shifted to running the business. Well, as we have learned with this pandemic, there are other things that you may need in order to survive tough times or even to thrive in good times. Business credit is certainly one of those things. So, how does your personal credit score differ from your business credit score? Well, first of all, they use a different scoring system or algorithm. They both look at some of the same things such as payment history, debt utilization, and bad marks such as collections or bankruptcies. However, these things and others are weighted differently to arrive at a different credit score number. Your personal credit score can range from 300 to 850, where your business credit score generally ranges from 0 to 100. There is also a difference in who keeps track of your personal and business credit reports. Your personal credit reports are generally handled by Equifax, Experian, and TransUnion. Your business credit reports are managed by Equifax, Experian, and a firm called Dun & Bradstreet. and each uses a slightly different scoring method. So, if you are a new business owner or simply haven't thought much about building your business credit, how do you go about it if you're starting from zero? Well, as I talked about in the video on entrepreneurship, you first must establish your business as a legal entity. That means the legal paperwork to establish your business as an LLC, a sole proprietorship, a partnership, or whatever. It also means getting the proper licensing and registering your business at the state and local level. Next, make sure that you have a separate business bank account. As you go through these steps, always make sure that your business name is exactly the same in every place that you use it. A lot of businesses have names that are similar, so be consistent. Next, check to see if you have a DUNS number. That's D-U-N-S. A DUNS number. This is a number that is used to establish your company's Dun & Bradstreet file, which can help potential partners and lenders learn more about your business, and it may also help them make informed decisions about whether or not to work with you as a client, supplier, or partner. Sometimes this number is created for you and you may not even know it. I will leave a link in the description below where you can search for your DUNS number, or you can create one if it doesn't already exist. Next, get a business credit card. From this step forward, always make sure that any business credit account that you open reports your credit history to at least one and hopefully all of the business credit agencies that I mentioned before. I will also leave a link in the description below to a site that explains in more detail how business credit cards work, how they are used, and which of the major ones report to which credit agencies. Next, open at least 2 trade accounts with companies that report to the business credit bureaus. Trade accounts are credit accounts with companies that you do business with. It could be a company like Uline that sells packaging and supplies. It could be a company like Granger that sells tools and equipment. It just depends on what type of business you have and what supplies, tools, or materials you might purchase. Just make sure before you open any credit account with them that they report to the business credit agencies. Also, before moving to the next step, try to make sure that you have established these accounts and have had at least 3 trade experiences that have been reported. This will make the next step easier to accomplish. Once you have accomplished the previous items, you're going to want to expand your credit accounts to include 3 to 5 accounts such as Office Depot, FedEx Kinko's, Home Depot, Lowe's, Staples, UPS, and perhaps a gas card such as Shell, Chevron, or Conoco. What you are doing is demonstrating that your business has established credit relationships with a broad spectrum of vendors and creditors. It's really no different than your personal credit, where you need to show that you can handle different types of credit, such as credit cards, personal loans, car loans, and mortgages in order to have a good credit score. Having these credit accounts can be very helpful with managing cash flow in your business. Let's say, for instance, you have a huge order that comes in, but you don't have the cash on hand to purchase the raw materials that you need to fill this order. By having these credit accounts, you can get your materials that you need, you can complete the orders, and you can receive that revenue once the orders are complete. And just like your personal credit score, your business credit score will be greatly influenced by your business behaviors. Pay your bills on time, every time, and don't incur too much debt, and maintain good relationships with all of your creditors by communicating and discussing any issues you have before they become a problem. If you will practice these behaviors, you will position your business to be able to access capital, whether it's needed to get you through tough times or to grow your business during good times. Good business credit behaviors can be the key to business success. And you know what I always say, change your behaviors and you can change your life. So until next time, behave well.